Hey everyone, Jim Fitzpatrick with CBT News. Thanks so much for tuning in. In the dynamic landscape of retail automotive, we delve into the impact of higher interest rates on deals and gain valuable insights into how Bel Air Partners is navigating the M&A market. Joining us now is Willie Beck, co-managing partner of Bel Air Partners. So thank you so much, Willie, for taking the time out of your busy schedule there to talk to us. I know that you guys are like, what do they say, a one-armed paper hanger, right now. Fielding calls of dealers out there saying, I want to sell, I want to buy. So thank you so much for taking the time with us. Really appreciate it.
Yeah, Jim, thanks for having me on today. Appreciate it.
So first and foremost, had the opportunity to meet with you at NADA just a few weeks back now. The dealers seem to be very excited about the year ahead.
They are, and it's great to reconnect with clients and prospects and industry relationships. Certainly during COVID, we didn't have that opportunity, so it's great to take advantage of that.
Yeah.
A couple of key takeaways from NADA and my conversations with folks and attending some of the sessions. Certainly the buy-sell market is very robust.
Yeah.
But it's uneven in the sense that, the best deals and the best growth markets are in incredibly high demand. And we've talked about Toyota and Mercedes and BMW and some other brands, certainly in Florida, that have gotten a lot of publicity.
Yeah.
And, conversely, other brands in sort of slower or stable markets, the pricing isn't as robust.
Yeah.
So buyers are being pretty picky in terms of what they target.
Yeah. We talked a little bit about high interest rates in the opening. What impact is that having in your deals today?
So certainly, as compared to borrowing costs a few years ago at 2 and 3%, now dealers are borrowing at 6 and 7%. So the same cash flow doesn't provide the same return on the dealer's investment.
Right.
And so, they have to determine whether they want to pay slightly less, but the seller might not agree to that. Or, certainly dealers have a lot of available capital still from the last few years, and with interest rates predicted to maybe start to come down towards the latter end of 2024 and into 2025.
Sure.
Any borrowing on a variable rate basis will start to come down for those dealers as well.
Sure. It's my wife and I are looking for a home right now, and which is unique, right? We're probably one of the only ones out there looking for homes while rates are this high. However, that being said, some of the professionals that I've listened to is they said, listen, here's the deal. Rates are a little bit higher, but they're coming down. You can always refinance that house. But what will happen is as rates come back down, sale prices will go back up. And the sale price you can't change. Does any of that apply when people are looking at, the dealers are looking to acquire other stores? We're like, yeah, money might be high right now, but we can always kind of refinance things and that, that kind of takes care of itself. Meanwhile, let's get in and get that dealership.
Sure. And, so for example, if you're a dealer in a market and a particular brand that you have been pursuing comes on the market across the street, that's your one chance, perhaps in your career, to buy that dealership. So you'll do whatever it takes. And again, understanding that financing costs might be a bit higher than you want them to be today. A year or two from now, you certainly could refinance. And in the meantime, you've been rewarded with the operation, that you were able to buy.
Sure, sure. Now, Bel Air's been around a long time, doing a great number of deals for a lot of the largest groups out there and some of the small mom and pop deals out there. Talk to us. How is your business? What have you got? What does your business look like for 2024?
So our business is very busy. We have a number of deals that are in various stages of process. One, we're literally just waiting for factory approval so we can close. That's been about a 60-day waiting period for us. It didn't close before year end. And then we have another deal we're just taking to market today. So we have deals all in that pipeline that we have to continue to work on and manage. I think my business partner Todd spoke to you recently about our valuation work.
Yeah.
But in addition to that, we're doing buy-side representation where we actually represent the buyer who is looking at specific brands or in a specific market. And, we provide the strategic advice and financial analytics for them to consider that opportunity. One in particular that we're working on, it's the third generation is now coming into the business. They're a medium-sized group, and they're looking to expand by 3 to 5 stores over the next year or two. So that's a great example of how we help on the buy side, not just the sell side.
Yeah.
And of course, private equity or family offices are indeed looking to invest in dealer groups. And we're advising a couple of dealer groups now that are contemplating transactions like that.
Oh, that's great. That's great. So things are it's more of the same then from 2023 into 2024. No major change.
Not really. It's the difference is the pricing.
Yeah.
Where with earnings coming down slightly and borrowing costs up, are the buyers willing to pay what the seller wants?
Right.
And many deals are occurring, so that is occurring throughout the industry. The reasons that some sellers would sell, aging, no succession plan, tired of the business, those are still very valid, and there are plenty of buyers out there that are looking for deals.
Yeah. Anything? Do you have any buyers that are coming in from overseas that are interested in deals here in the U.S.? Do you see any of that happening?
We're not actively working with any. We were about 2 years ago. There were some Central American and South American buyers, particularly in Hispanic markets, that were looking. We partnered with one in South Florida, but at the end of the day, the pricing in South Florida just turned them away. They could reinvest their capital in their home market at a better return.
Yeah.
So.
Yeah. And of course, the top selling brands continue to be Toyota and Lexus and some of the Porsche, and right?
Yeah, I mean, the tier 1 luxury are in great demand. And then certainly the Japanese brands are in great demand as well. But that's not to say domestics in certain markets, Florida, Texas for Ford and Chevy and Stellantis, because of the truck market.
Yeah, that's fantastic. So that's all good news from William Beck, co-managing partner at Bel Air Partners. Thank you for joining us today, and thank all of you for watching Inside Automotive right here and the CBT Automotive Network. And now we're streaming on Roku and Apple TV, so you can find us right there in your home. So thank you so much, Willie. I really appreciate it. I'd love to do a follow-up with you, see how things are moving along.
Thanks, Jim. Good to be with you.
Great, thanks.